Yo, massive! Wagwan! You know it's Rebelside.fx, your favorite trader from Jamaica. We're back at it again with another banger. Just to disseminate more information for the young traders, them and the people who are interested and don't know where to start. We just provide some basic information so you guys can follow through. Because it's very hard to get information, especially to get all the information that you need in one place. Like when I started out, I basically was all over the place trying to get the information, listening to so many different traders, and no one was providing the specifics that I needed. So, this is me trying to provide you with the specifics so that you can understand the concepts and know what you're doing so that you don't lose as much money as you would have if it is that you didn't fully understand these concepts and principles in trading. But they're here for just kind of tap in and just, give you guys more knowledge, give you guys more information because knowledge is never enough, especially on our trading journey, right? We're not here to keep the information and hoard the information for ourselves. We're here to share because it's all about growth. There's enough food in this game for everyone. So, for all the people who want to keep the information for themselves and don't want others to learn and grow and to eat food, as we would have said in Jamaica, well, you guys can go chuck off. We don't need you guys around here. You guys are pessimists and we're not into that energy and that lifestyle. Anyways, let's get right to it. So, today the topic will be, just to get straight to the point, order blocks, right? Yeah, man, we're talking about order blocks, right? So, what are order blocks? Like, ask yourself that question. What are order blocks? How do order blocks work? What are the purposes? Or what is the purpose of an order block, right? So that's all we're going into today. I'm gonna try to not make this video extremely long, you know. But yeah, so let's start. No, let's just jump right in it. What is it that we're looking at today? That's the question, right? So the big question sign. All right. So today, right? Today, meaning today in Jamaican. So today we are looking at order blocks, right? Order blocks. Like it just sounds fascinating though. Like when you hear order blocks, like it just have a ring to it. Yes, them was when you know say you can use them thing for make money and you can rich off of it. I wanna talk a fairy tale thing, right? We're speaking about actually getting rich from trading. It's possible, guys, right? It's possible. It's possible. But what are order blocks though? That's the serious question that we'd like to ask, right? So, to put it short, order blocks are basically areas in the market where there's an opposing candle that formed before price basically changes direction. For example, let's say price is moving up in an uptrend, right? So price is going up, and then there's one red candle that forms. Let's say on a 15-minute time frame. That one red candle that forms, right? That's an order block. After that red candle forms, then you start to have green candles continuing onward in the uptrend. So that one red candle, it's an order block because it's the last opposing candle or ranges of candles, right? That basically formed before price continued or changed direction, right? And the reason I said ranges of candles because you also have order block ranges, right? So we look at ranges in a different discussion so that we can understand how ranges form, what ranges are. But you have order block ranges. When you go to higher time frames, it forms one solid order block. But when you go to a smaller time frame, it forms either a consolidation or it forms a range on a lower time frame. So it depends on how you would choose to interpret the market, basically, right? But basically, that's what an order block is. And in the case of a change in trend, so let's say the market is moving up in a long position, an uptrend, and then you have the last order block, right? The last green candle before the market switches to the downtrend. So the last green candle before the market changes position, or if it is that the market is moving in an uptrend and then it forms, let's say, an order block a red order block, which would be a quick down movement, and then it continues up, and then it goes ahead and starts to change direction, right? All the candles after that red order block, if it is that there's no interruption, they're impulsive, they're continuous consecutive green candles, then that's an order block range. If you go to a higher time frame, it will show you that that's one solid order block. So that within itself would be considered an order block range. You can mark out the whole range, or you can just mark out the smallest segment of that range, which would be the last order block, or the last candle, before it is that it actually changed direction, if it is that you want a smaller zone to work with, right? But we'll be speaking on those, so you guys will get a solid understanding once we go to the charts. And it's the same thing basically for the inverse. Now, what are the purpose or purposes of order blocks, right? So when it comes to an order block, the purpose or the main purpose of an order block, normally when price moves away from a point, right, and it forms an order block, normally when price moves away from a point, right, impulsively, it normally comes back to fill that spot. In most cases, tapping into that order block or that order block range or zone, right? So that's how price normally works. So price normally makes impulsive moves. So right after the order block, basically price is running, right? Price it's running after the order block. So once it starts to run, you would have a retracement back into that zone. And then once it is you have that retracement back into that zone or partially into that zone, right? It doesn't have to go directly to the order block. It can just cover liquidity up until maybe some fair value gap in the area. Or it may go directly into the order block or even take the entire liquidity out, right? Which is tapping out the order block, breaking that range slightly, and then just continuing in the opposite direction, right? Or in the continued direction, I should say. Right, so it would just go ahead and reverse and continue back in its original direction, right? So that's how order blocks work basically, right? So when it comes to an order block, we use order blocks to help predict where it is that markets would return to, right? And where we have possible points of interest so that we can know where it is that we can take a trade or exit a trade based on our market conditions, right? So yeah, very simple, very straightforward. That's what an order block is. Now, look, we touch the charts, so one can actually see exactly what I want and understand exactly what's going on. So, 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 as you guys can see right here, right, I actually have the VIX. So I actually have the VIX 51S, right, chart up right now, and this is the derivative volatility pair. It's a synthetic indices, right? It's not operated by any specific market conditions like the pairs, like commodities, like volatility index, like the normal volatility indices. It's synthetic indices. So synthetic volatile or volatility pairs, right? I use this because this is the main thing that I trade, but it can be used on Forex also. It can be used on crypto. It can be used on any trading platform basically, right? Because it's the same structure, it's the same thing. Prices move up, down, consolidate, sideways. Those are the three range bound zones that prices move in. Okay, so let's take a look here. So normally what price does, price makes an impulsive move. Let's go to a higher time frame. Let's say a 1 hour time frame, right? So normally what price does, price normally makes an impulsive move, and then after that impulsive move, price would normally return to somewhat cover that move. Now, it all depends on what it is you're looking for in the market. But once it is that price makes that impulsive move and price comes back to that zone, it normally taps either into the order block zone, right? Either it taps into the order block or it taps into a fair value gap. And as we said, sometimes price may actually break the zone like we have right here. Let's turn this around. This is an order block. So this itself would be considered an order block so that you guys can have visual representation, let me go ahead and just mark this out. So right here, this would be considered an order block, right? And this would be considered an order block zone. As you can see, it's a straight impulsive move down, entirely down, right? Uninterrupted, consecutively, red candles, right? So all of this would be considered the order block zone, but this zone is relatively large. So a lot of persons would basically refine this maybe to the 50% margin. Some people would do that, and some people would bring it basically down here. If it is that you had done it to roughly the 50% margin, then this would have been a trade for you, right? Because price normally returns to roughly the 50% margin. And I'm just speculating here based on my visual prowess, right? So this seems to be the 50% margin thereabout. So as you can see, right, it looks about right. It's close, very close to 50% of the full order block, right? But this is the thing. Price came down. You have a smaller order block right here. Price came and broke this, right? It tapped it out. Basically took the liquidity that was resting here, took the orders that were resting here, and tapped into this order block zone. Now, this order block and this small order block here, or I should say this, yeah, so this fair value gap and this small order block that's situated right here, right, they're all within this range. So from this high to this low, before price moved up impulsively, this is an entire range, right? Price broke the range right here and retest the tip of that range to go for up further, and then eventually it came down. But everything's happening within this range. So it broke and came into this fair value gap that's situated within this order block, or within this order block group, right, or zone. And then finding the 50% of that zone, seeing that it's such a big order block, we wouldn't want to try and trade this entire order block. So we found that 50% zone, price stopped right into that zone, right? Literally right into that zone. Let's go ahead and see if we can bring out let's see if we can bring out the Fibonacci retracement tool, right? And actually get the exact 50% margin. Alright, so I was a little bit off, just a little bit, but here's the 50%. So up here 100, and down here 0, 50%. Exactly, it tapped right into the 50% zone, right? Right, so as I'm saying, so as you can see here with this order block zone, price came all the way down, and then price came up and it tapped into that 50% area. Tapping into that 50% area, once you found that 50% area, you see where price stopped and broke that zone, right? So it came into that 50% area and tapped right into the fair value gap that's situated in this range, in this order block range or zone, right? And then price continued up. And keep in mind, this is all being done on the 1 hour time frame, right? So this would be the immediate order block. This would be the entire order block range. If it is that you go to the higher time frames, you would have seen where this would have been an entire order block, right? And then it came up and formed smaller order blocks. It broke this order block, it tapped in, created a new order block right here, and then it went up. This order block is also a supply zone, sorry, a demand zone. This order block is also a demand zone. And I've said this in the supply and demand video, but let me say it again. Something that you need to know, all supply and demand zones are order blocks on higher time frames. All supply and demand zones are order blocks on higher time frames. Keep that in mind, right? And all supply and demand zones slash order blocks are consolidations on lower time frames. So keep that in mind. So the higher time frames, the supply zone would be represented as an order block. On the lower time frame, that order block would be represented as a consolidation. It may also be represented as a trading range, which would be an order block range on a smaller time frame, like we're seeing here, But then when it is that you go to the lower time frame, you would see where the most previous order block, when you go lower, you'd see where the most previous order block would be a consolidation. Let's take a look at that. Let's see if we can go to this 15-minute time frame just to see what's going on here. Okay, this is the 15-minute time frame, and this is the same entry that we were looking at. As you can see, right here, it's a consolidation. It came down, came up, down, up, consolidated, finally broke that range, broke that zone to continue higher. And then it formed order blocks along here that we weren't seeing on the 1 hour time frame. It came, took out liquidity here. It tapped into this fair value gap area that we saw earlier, right? And tapped into this order block right here, right? So on the smaller time frame, we got a more precise view of what's going on. So it tapped right into this order block, which is right within the 50% zone as per our fib tool. As we can see, this is marking the 50% zone. It came and it tapped right here, and everything is situated within this order block zone or this order block range, right? And price basically shut off. So when you understand order blocks and how it is that you can utilize order blocks, right, it makes trading very easy. Once you understand the essence of an order block, that it is a supply zone, that it is a demand zone, and that they literally work the same way. It just depends on the time frame that you're using, what it is you're looking for, how it is that you're planning to analyze the market. Like, it makes trading extremely easy. And we can take a look right here as well. Right here, this impulsive move, right? This is an order block as well. If you go to a lower time frame, it would be represented as a consolidation or a trading range, right? And let's test that theory. So let's go to, let's say, the 1 minute, right? Let's go to the 1 minute. Why not? Why not? Why not? So let's look here. This is the 1 minute time frame. There's your consolidation. As small as it may be, it is a consolidation. It came, it tapped into this zone right here, right? So it came and it tapped into the zone, tapped in, and then right here, you have a next consolidation. And then price basically moved all the way up here, came back into the zone. So this is where price basically retests this area. So price came up, tapped in, came back, and tapped right into this area, right? So it came in for this liquidity slash fair value gap here, and then it consolidated before it pushed up. And on the higher time frame, it went ahead and tapped into this order block zone right here, which is an order block on the higher time frame. We can mark this out and check this as well, going back to maybe a 5-minute time frame or even a 15-minute. Let's see it. But it came, it tapped back, it went up, then it came and it tapped right here on this order block. So this is basically just to show you how order blocks work. This order block zone slash range, this order block range, it came up, it tapped in. And as I said, this would also be a demand zone. So they're literally the same thing. It's just a matter of the time frame that you're trading on. If it is that you're trading on a higher time frame, then you may see solid order blocks. If it is that you're trading on a lower time frame, You may also still see solid order blocks. It depends on what you're looking for, right? Price may return. Maybe you're scalping the market. This is a 1 minute time frame. So maybe you're scalping the market. You're trying to see where price would come. You'd say, okay, this is a demand zone. Price stops into that demand zone, right? Right here, you'd say, okay, this is a this is a supply zone. This is a fair value gap. You're looking for price to top right here into this order block before the fair value gap, or even into the fair value gap itself. And what did price do? Price stopped right into this order block. Like, let's look at this, like literally right into the order block. Right, price stopped right into this order block, right? And this is on a 1 minute time frame. Now, as I said, I would not recommend you guys to trade on the 1 minute time frames, right, by itself without using the higher time frame for guidance, right? Because the 1 minute time frame has a lot of noise. It can be very confusing to persons who don't understand it. But once it is you understand what you're doing, then go ahead by all means. And let's look right here. This is the area that we just marked out on the 1 minute time frame, right? And what do you see here? That consolidation zone that we marked out, this is the order block. The order block before price moved impulsively. This order block range on the lower time frame is also shown as one order block here. And it's the same thing. So once it is you understand how order blocks work, believe me, it's very easy for you to basically initiate trades and incorporate these into your trading process. Let's take a look here. This order block range, right, on the 5 minute time frame. So based on what we're seeing here, price came, moved impulsively, and then it formed an order block here and continued impulsively. It came back, tapped into this order block zone right here, came down, retested, tapped into this order block zone, came down, and then impulsive push up and completely respected this zone, created a double top, and then it pushed down. So do you see? Price respects these order blocks, right? The problem is knowing when you should actually enter the market. That's the main thing. Like, when should you enter the market? Because if you had entered here at this order block and then price came down, it would have taken you out right here, and then this would have been the move if it is that you were scalping the market, right? So the problem is patience. A lot of people don't know how to wait and how to just watch the market, right? And there are other confluences that you have to use as well. You can't just use order blocks by itself, supply zones, liquidity. You have to incorporate everything and come up with your own structure, your own understanding of the market. Let's look right here. So as we can see from this point, price came impulsively up to this point here, right? And then price pushed down. So price formed a small order block here that was not respected. So this was not a prominent order block, but this was the order block that initiated the move, right? This initiated the move. As you can see, there's a red candle here. So this would be the order block that initiated the move down. Price came and it tapped back into this order block. Then it pushed impulsively, right? Then what happened? Price came and tapped into this order block, covering this liquidity. And one more thing to remember, normally when it is you have an order block, right after an order block, price pushes, right? It's a concept of the Wyckoff theory, or what I call the MOT theory, or market operation theory, I should say, right? So basically it explains that price normally moves, consolidates, and then it drops, right? The market operation theory is something that I myself came up with, but it's not unique to me, right? It's a concept that has been about, but the way how it's explained, um, I'm I can say I haven't seen anyone who explain it the way I have, but it's a concept that's already out there basically, right? So it's the same thing as the Wyckoff theory. So Wyckoff shows that you have impulsive move, then you have the consolidation, and then after the consolidation, you have an impulsive move in the opposite direction, which would be the change of character, right? It's the same thing. Once you understand that all order blocks are consolidations, you know that at the order block, you're expecting Wyckoff to take place, so you're expecting that consolidation and then a break of that consolidation, right? That's all it is. Like literally, that's all it is. Let's take a look right here. It's literally the same thing, and this is just the 5 minute time frame, right? No, I'm not saying you take all of these trades that we're looking at right here. I'm just showing you these trades so that you can have a clear and precise understanding of what it is you'd be looking for, right? But we'll have other videos going extremely in depth, showing you exactly how you'd use this, when you'd use it, so that you can have a more precise and direct understanding of the market and being able to compile your own strategy or utilize strategies that are already there, right? My main aim is not to teach strategy though, it's just to teach the basics so that you can utilize the basics. If you want to learn strategy, then you can learn that on your own right after you understand the basics. But look here, this is an order block zone or order block range, and then price pushes impulsively down, creating smaller internal structure, and then it takes out the internal structure and taps back into this order block, tapping into these fair value gap areas right here, right? And then what happens? Price falls, like literally falls. And if it is that you go to the 1 minute time frame, you can see price literally fell. So it's nothing difficult, like it's very easy for us to understand. Price came down, retest the area, it respected this zone, and then it fell, right? Came back into this zone right here. So it's nothing difficult. And even if it is that we go, let's remove all of this from the chart. We already checked it on the 1 hour, 30 minutes, so on. But let's move over. Let's move the chart over, right? Let's look at somewhere else. Let's look here. So, boom. As we can see right here, this is a 30-minute chart, right? Price came all the way up here. Price came down. Then it came back and respected this zone, tapped into this order block. Again, tapped into an order block. Then price came down, right? Impulsive move here, came down. As we can see, it took this out. So it took out this order block, and then it came and it tapped exactly into this order block right here, right? So it tapped into this order block right here. And what would make this order block extremely strong, right? What would make this order block extremely strong? It's the demand zone that's right here, and this order block range that's actually right here, right? So this is a strong impulsive move down. Price took this out. This would be the next target, and then you have this demand zone right here, this demand zone slash order block range right here, and then it would also be a resistance zone becoming support, because this would also be a resistance area. Price would come here, retest in this zone, push down, so it would have become a support area right here, and then price retest this support area and then pushes down, right? But we'll speak about support and resistance in a later video. It's basically to show you guys how it is that it's structured in the market, so that you can have an in-depth understanding. And one more thing I should say that I'd like to highlight as well. Whenever it is you see a wick also represents the highest point in a market. So the wick on the candle represents an order block as well, on the lower time frames, that is. So all of these wicks that you see here, if you go to the lower time frame, they're forming lower time frame order blocks. And what happens at times? Price taps into these wicks and use them as support, right? Use them as support or taps into the demand zones in those areas using them as supports. Now let's look at right here. Let's take a look at this area, right? What can you see right here? Price pushed up impulsively. It wicked right here, tapped into this fair value gap, right? This fair value gap, it tapped in, so it cleared that area. So there are no more fair value gaps here. And then it came up and it basically tapped right into this wick, right into this order block. Now let's take a look at this on the lower time frame and see what we're seeing. Right, so let's take a look on the lower time frame. Let me just clear this. So right here. Right, so what are you seeing here? So remember on the higher time frame, it showed us a week. But now we're basically here. We're seeing where there are order blocks here. So an order block here, it came back, it retests this order block zone, right? So it retests this small order block zone, and then this new order block was formed, price went up impulsively, it came back to retest this zone, right? This zone basically covered the fair value gap that was resting right here. This impulsive move, it came down, it took it out, and then it came back to retest this order block zone. So when it is that you see wicks also represent order blocks on the higher time frames. So that's something else that you need to keep in mind as well. Normally price would respect the wicks. Right, normally price would respect the wicks because they are also order blocks. You just have to know to have the patience and allow your strategy to play out. Don't rush the strategy, right? Allow it to play out. And right here, let's take a look at this as well. Right here. So this is an order block zone, right? Price came down impulsively, started to consolidate. It created this order block before impulsively moving down with smaller internal structures here. And then price took all of these structures out. Took all of them out, tapped into this fair value gap zone. And then once it tapped into the fair value gap zone, it basically fell. And remember this, once it is you have an order block or an order block range slash zone, right? It's stronger when it is you have a fair value gap slash impulsive move. If the impulsive move came down but it was quickly taken out by the next candle, then basically that makes it weaker. But if it is that there's a strong move there and it hasn't been retested, you can expect price to come back to retest this zone. So you can wait for price to come back and retest this area. So normally what happens, you want to use your order blocks, right, along with the trend. So let's take a look here. Price is moving impulsively, as we can see right here, right? So it came here, formed an order block right here. So it formed a bearish order block right here. So this would be a bearish order block because it pushed the market or forced the market to go down in a bearish momentum, right? This would be a bullish order block because it forced the market to go up in a bullish trajectory. Right here came down and then it forced the market to go up bullish. So the last red candle before the green candles would be considered a bullish order block, and the last green candle before the red candle would be considered a bearish order block, right? Now as we can see here, price came up and then it started to break down. It started to create small, so this supply zone slash this order block, so it left this zone, price left this zone and pushed all the way down. So price left this zone and pushed all the way down, came here, consolidated for a bit, and then it came down, as we can see right here. And this is the reason why it is that it's good to understand multi-time frame analysis, because if it is that you saw this, you wouldn't have seen this as an interesting move, right, on the higher time frame. But if it is that you had gone to a lower time frame, this would have been a great move. Why? As you can see right here, price wicked, right? So price created a wick right here. What does a wick mean? A wick represents an order block. When you see a wick, it simply means that price moved impulsively in one direction and then quickly retraced in the opposing direction. And the wick that's left on the candle represents that price didn't leave any extra formations. It impulsively moved down. So a lot of persons would not be looking for this move, literally. So it's good to understand the market, how it moves, what it is to look for, so that you can basically maximize on all of your resources, maximize on all of your knowledge to basically get the most out of the market. Because this is on a 30-minute time frame, right? And this would be a great move. Like one candle is 30 minutes. So imagine getting an entry right here on the lower time frame, and then this 1 2, that's an hour, basically 2 hours, well, two, let's say 3 hours worth of movement, right? Let's just put it there. But also, this is a higher time frame move, because that move would have been a lower time frame move, but this is a move for the higher time frame. So let's say you missed that move, right? And you've been watching price, you decided to go on the lower time frame, you did some scalping, price came down. But then all of a sudden you saw price starting to retrace, right? You started to look at price started to retrace. You see where it created an order block here. It came up, created a next order block, boom. Tapped into this demand zone slash order block right here, right? And you basically watched it. You noticed that there's an impulsive area right here. There's one order block right here. And then you have this tip right here that tapped into this previous zone. And remember, we said this is also an order block. Now let's take a look at this, right? This is why it's very important to understand how markets move. What do you see right here, right? So this is the order block that tapped. This is the order block that was formed after price tapped into this supply zone, right? This consolidation right here, and tapped into this order block and fell. It came back and tapped into this zone. It tapped into the wick, right? Look good. Look, it tapped into the wick. The wick is also an order block on a lower time frame, right? So this would be the entire zone, because the wick is a part of this area, right? But it came and it tapped directly into the wick. And then after tapping into the wick, right, it gave you an order block right here before completely falling. Take a good look. And even right here, it formed a smaller order block. But let's just go to the smaller time frame. Just take a quick look at this right before we go back up, right? Here is the wick, as we can see. So this would be the supply zone, right? The order block that we saw earlier on the higher time frame. So this is how it looks, the consolidation on the lower time frame. So it consolidates, it breaks down, and then it comes up impulsively and then quickly breaks down. And this is on a 5-minute time frame. It quickly breaks down. So this would have been a good entry, depending on how it is you trade. But a lot of persons wouldn't have seen that, because they wouldn't have been looking for that. That's the reason I tell you guys, you need to understand what to look for, how it is that these things form, right? And how it is that they move in the market. It all depends on how you trade, right? Look, let's say you missed that trade. You could have still gotten in, right here. It tapped into this order block as well, right? So that's the reason why it's good to understand multi-time frame analysis, because you might see a trade on the higher time frame and you miss that trade, but you understand the direction because you know what you're looking for. You see the direction of the trend based on the higher time frame, so you can go to the lower time frames and look for precise entries. So let's say you missed the initial move, right? and price started to break down, you could have gotten an entry right here. Let's say you missed this entry. You could have gotten an entry right here. Right, this is the 5-minute time frame. You could have gotten an entry right here, tapping into this 5-minute order block. You wait to see if price stops in. Price stops in, then it starts to break down. You enter roughly around here, and then price falls, right? Price go ahead and falls. Price comes back into this zone. Your stop loss would have been right here, right above these highs, right? Double tops. And then right here, price comes and it taps back in. And then you basically, you get that fall. Let's look at it on the 1-minute time frame, right? It still has a lot of playing out to do, but basically this would be the move, right? And if it is that you wanted to scalp, you could simply bring it down to this point. You basically bring it down to this point right here, and then once it taps in, you basically close your entry, right? And that's a quick scalp, like extremely quick.